Let's take a look at the assignment for practice round 3. So question number 1 says, despite earning significantly less, Chester's ROE was just approximately 4 percentage points. Take a look up here below. In fact, not even 4, 3.3. Okay, so earned, 10 million less, half, really, approximately half as much as Team Erie. You'd expect its ROE to have been, right, maybe 12%, right, or 13%. But Chester had an ROE of 20.9%, so even pushing Team Erie in that regard. So I said this underscores the significance of equity management, or really financial management altogether. Okay, so what financial managers do, they take a look at that and they say ROE is really what's kind of important. So the question then is, what would Erie's ROE have been if its equity were $30 million lower? All other factors remaining the same. Okay. Small bonus, what would be the best, easiest way to accomplish that? So we want to just take and calculate. This is going to take a calculation, use the real numbers right from practice round 3 there. If we lowered Chester's equity by $30 million, okay, what would its ROE have been? Obviously, it would go up, right? Okay, so I'll let you take it from there. Number 2, Andrews benefited in the high end by selling significantly more units than its potential. So kind of the opposite of what we've done. We've looked at sales that they've missed out on. In this case, Andrews benefited, right? Selling more than its potential. How many extra units did it sell? What was the increase in dollar sales? So, and we need to look at the one down at the bottom here, right? That gives us some actual numbers between the potential and the market share. And then after you calculate that, and keep in mind, this isn't straight across, so you got to kind of, make sure you're looking, for example, a gape or a gape A, right, is here, and then it's kind of down here a little bit. So don't go straight across. You got to, maybe it would be on a bigger screen. Maybe mine's just a little snug here or something. But in any event, make sure that you're looking at the correct numbers, right? Figure out the percent of demand that it gained, I guess, in this case, and then you have to calculate that based on what its sales price was, right? To figure out what sales it gained by it benefited, right, by the other teams not making enough, really. 3, what would Ferris's earnings per share have been if it still had 2 million shares outstanding? Ferris has been buying back stock. Okay, Ferris has been buying back stock. And so we want to calculate then how well it's done, okay, how much it's improved its earnings per share, this round in particular, okay, how much it's specifically, I guess, how much it's improved its earnings per share based on the fact that it's cut that down. I can look at that and make an estimate, right? Okay, 2 million versus where it's at now. Yeah, I can make a pretty good estimate, I think, but I want you guys to do the actual math. Lastly, what is the total, and I've got total in bold, industry capacity for round 4 in the size segment. So we need to know what the capacity is going to be for the next round, and I put total in bold for a specific reason. I'm not going to give any more hints other than that, but just make sure that you're figuring and looking at it and coming up with the actual total amount. I guess I'll give you a hint, right? We can make more. For those of you that listen to the video and listen to the end, right, we can make more than just in the first shift, right? End of hint.